All right, welcome back to the show. Today, I've got Flint Jamison, who's got an interesting story, and I can't wait to dive into it. But he helped, or maybe engineered, and we'll find out more, design the wing structure of the Boeing 787, which is absolutely awesome. So, Flint, welcome to the show.
Yeah, thanks for having me.
Yeah, this should be fun. So, give us 30 seconds, a minute, kind of brief overview of who you are, what you're doing, and what you're going towards in the future here.
Yeah, so what I currently do, obviously I was engineer in the past. I did aerospace engineering for 20 years. But now I own a real estate investment firm where we go buy multifamily apartments or developments. Most recently, we're now buying a portfolio of medical office space. So really getting diversified with our investors.
That's awesome. So take us back. Obviously, you were an engineer. Talk a little bit about that, and then kind of want to go into at some point, why you decided to leave that. Because it sounds like it was probably a fulfilling job. So I want to dive into that.
The engineering world it's definitely sexy when it comes to conversations at the bar, because you get to talk about designing wing structure on Boeing aircraft, getting patents, and then moving on, leadership positions. And then my last position in that career space was program management, modifying aircraft for the Air Force, which is wildly different. I could go down a rabbit hole. I could geek out about airplanes for a long time. It's definitely still a thing I've always had a passion about. With there's car people. I'm an airplane person. But in general, that life was very time intensive. It's super high stress. It's basically trading a lot of your time for someone else's goals, right? It's being away from family, carrying that stress. Even when I am with family, I'm carrying a lot of stress. So I started looking for ways to get out of that and create a more fulfilling life for myself. And that's where the real estate investments came in 2018. I bought a duplex. There's a long story there. That was an interesting learning experience, but it was like my stepping stone into the world of commercial properties. And I jumped in there, started partnering with operators and investors and getting apartment buildings, and then moving on to developments, and then now medical real estate. I've done some seed investments for a billionaire going round 2 on a startup. It's wild once you allow yourself to step outside into this alternative, quote unquote, alternative space. It's weird they call it alternative because real estate's been around way longer than the stock market. Yep. But once you allow yourself to step outside of that world and start educating yourself, there is so many different ways to make money. There's ways that are tax advantage. There's things that give you potentially more stable returns. And then there's higher returns. I mean, it's an interesting world. And the opportunities, had I not gone there, I wouldn't be where I am today. Just put it that way.
For sure. And I want to dive into that and want to find out too. We love diving into people's stories and, learning how and why people leave their 9-to-5s. But before that, somewhat of a selfish question. I was, for whatever reason, we'll call it 5, 6, 7 years ago, I became a very nervous flyer. And I'm not really sure where it came from. I've done a ton of work, and I'm much better. There's probably still a little bit of me that anxious leading up to it and then getting on. But once we're up in there, I'm usually pretty fine. But tell me, obviously, you're an engineer. You know a ton about planes. Yeah. Give me a peace of mind on how safe planes really are, and we hear it on the news all the time, right? Oh, a plane went down, but it's like, well, that's one plane out of the past 5 years.
Yeah. I mean, statistically, it's still the safest form of travel. It's just anytime one happens. It's funny. There's an analogy back when Tesla came out and they started, the first Tesla's on the road, and every single Tesla accident was like, oh, Tesla had an accident. I mean, the same thing with aircraft. There's a few enough of them that it becomes newsworthy. Now you don't hear about Tesla accidents because there's so many Teslas and there's always car accidents. So there's just, it's not newsworthy, but airplanes are newsworthy. And it is newsworthy, rightfully so, because there's so many lives at stake. Yeah. But yeah, I mean, it's still the safest form of travel. What's crazy is, so to give you some examples, the amount of testing we did at Boeing, we built 2 specific aircraft that were never going to leave the ground. One was the static test, and those are the famous, well, I call them famous, that maybe the general population doesn't know about them, but one of them, we literally take it to the max load that it will ever see. We pressurize the fuselage. We bend the wings to the point where on the 787, we couldn't break the wings. We took them past design criteria. And then we're just like, we can't do any more things now because we actually ran out of stroke. All the mechanisms, that the hydraulic cylinders that were pulling them, the wings were pointing vertical. And I actually got to stand below the camera that was taking a picture that became famous in the aerospace world. If you go look it up, 787 wing test, I was standing below it watching the wings get bent, and then the actuators couldn't pull anymore. They're just out of range or out of motion. And so we're like, okay, the 777 back in the, so you got me geeking about this now.
No,
the 777 back in the, was it the 90s, early 90s when the 777, so they actually broke the wings. They took it past the design limits and then continued. They had enough range of motion in the machines to keep pulling, and they actually broke the wings. And what was really fun in that results was they knew the failure mode matched the analysis. They knew where it was going to break. And so the 87 was like, we can't, the wings move so far. They're so flexible with the composites. They were just like, that's all we can do. So
that's crazy.
That was one aircraft. The second aircraft, we call it the fatigue aircraft, where it sits outside and it's still under the same machines that are pulling and pushing it. And it does a flight cycle, a simulated flight cycle every 3 minutes. Pressurize the fuselage, depressurize, load the landing gear, do some turbulence on the wings. You can sit there and watch it every 3 minutes. It goes through this whole cycle and the whole airplane is shaking around. And they do this for years, and they put it through something like 60,000 flight cycles. And through that, they inspect the airplane and they try to find the issues before they happen in real world.
That's wild. Yeah. And most people don't know that. And I think, don't want to talk about myself, but I think for myself, it was more the lack of control. It's like, who are these pilots? Do they know, do they know what to do if we encounter an issue or whatever? And, obviously I got over that, but it's still, you're not in control and you're 35,000 feet in the air. It's it's a kind of actually next door to us is a private pilot. So I've talked to him quite a bit too, but it's a kind of a non-human type of thing that we're doing that, we figured out.
Yeah. It's oddly weird that we're so comfortable. I often think about this. You're at 35,000 feet. It's minus 40 degrees outside. You're traveling at 400 knots and you're just comfortably in a seat.
Yeah.
Like if everything were to disappear around you and you're just floating in that space, it's like you wouldn't survive.
Yeah.
Yeah. We're comfortably.
Yeah. We can't talk about that stuff because that stuff freaks me out a little bit.
That's great.
No, it's true. Like it's a weird thing. You're basically in a missile, flying across the country and, 40,000 feet in the air. It's a weird thing, but it's it's unbelievably safe, and it's good thing.
Yeah.
So obviously you were an engineer in 18. It sounds like you got your first cash flow in real estate.
Yeah.
What happened in that transition? Like what happened? And then when did you leave your job too?
Yeah, I left my job in 23, but so the duplex, it's a fun story. If you want a fun story, it was a BRRRR strategy, but buy, rehab, refinance, rent, refinance, repeat.
Yep.
And it was super stressed. So I bought it for $80,000. I used hard money. And then it ended up taking 6 months, not the anticipated 3 months. So standard story, it'd take twice as long and cost 15, 20% more. Anyway, I finally got a renter in. The renter was three tenants essentially. As the story was told to me, it was some lady was going to rent the upper unit and also sign the lease for the lower unit. She was taking care of her elderly aunts. Thought cool. I essentially have one tenant for two properties, or for the two units, and it went solid for up until 2022. They were paying rent, and all of a sudden rent stopped. Like, dang. This was in Milwaukee. I was living in Colorado, so it was far away. I didn't get to go. I didn't visit it. I had a property management failed me on this one. When they stopped paying rent, this was the world post-COVID where they could fill out forms for rental assistance, and so the PM was helping with that. I'm like, cool, all right. Well, while we're doing that, I just want to list it for sale. I'm done, because I had moved on to syndications at that point. I hired a local real estate agent who works a lot with investor properties and investor, buyers. And she, on very short notice, showed up to the property to walk it, saw a sign in the front that said, Alzheimer Senior Care. I forget, Sunshine Alzheimer Senior Care Facility. Wow. She quickly calls me up and says, Flint, did you know that your duplex is a senior care facility? And that's when things went south fast. Luckily, she found a cash buyer really fast. We had it closed within 30 days. We were totally transparent. Hey, there's someone, they're breach of their contract. They need to be evicted. He still took it on, and I was out. A week after that real estate agent texts me and says, Flint, you got out just in time. The tenant had staff workers taking care of people. By the way, the care facility she was running, she was living upstairs still, but she had 2 beds per room. There was 3 beds, 1 bath per unit. So she could put 6 geriatric Alzheimer's patients in that lower unit. So from a landlord perspective, think about the liability that I was carrying without knowing it. No. She was operating a business with geriatric patients, and it could have gone sideways so fast on me. Anyway, so her caretakers, she hired a staff to take care of these people, and apparently she stopped paying them their wages as well. So they showed up one day outside, walking around with guns, demanding to be paid. This was the week after I sold it, and I was like, whoa, dang. So there's some lessons learned there. I just visit the property more, because I yelled at the PM. I was like, you guys have been there doing repairs and you didn't see this? They came up with a bunch of excuses, and I was like, you guys screwed me. And part of me is like, were you colluding? I don't know. So what I found out, she was charging $3,500 per bed. Wow. I was charging $1,700 total for both units, because it was Class C area. But yeah, anyway.
That's crazy. Yeah, but you've got to go through some of those war stories to learn. Yeah. As long as you learn, right? I think most people do learn, but you learn from it, and then you move on, and then you create systems that work. So kind of fast forward a little bit, I guess. Obviously, your first one didn't go quite as planned. What happened from there, and when did you catch the bug and you're like, all right, this is going to get me my 9 to 5?
Well, so after I got done with the duplex, the goal was to rinse and repeat. I didn't get the cash out refi. All I got was a refi and no cash out. So I was like, dang, well, now financially I have to start over. The whole goal in the burst strategy is you get a bunch of cash back that you go and put it back in, and you keep going. I didn't have that. So I was like, well, that sucks. First strategy failed. At least I'm buying and holding. In 2019, I started just listening to more podcasts, and then syndications came up, and then I started getting educated on that. So by 21, I launched Vestas Capital, and I started finding partners to join with. And late 21, I got pulled in and started raising capital to jump on a big 104 unit. So early in 22, we acquired that property. Oddly enough, I sold that last property in my duplex in 22. So the two kind of overlapped. And then, yeah, I haven't looked back since.
Was the plan the entire time to scale and then leave your job?
Yeah. And the reason why I was so intrigued to jump to the bigger commercial properties is one, as a landlord just running your own portfolio, I guess a couple things. The economy of scale doesn't work very well when you have a bunch of single properties.
Yep.
Duplexes all spread around a city or a couple cities. So I wanted that. And then the other thing, I just doing the math, Bigger Pockets back in 2019 was saying on average people make about $200 a unit per month profit. And if you want to make $100,000, that's like 50 units. And I was thinking that how long was it going to take me? How much capital was going to take me and bandwidth to acquire 50 units? It's like, this is crazy.
Yep.
So get to the economies of scale, jump in with a bunch of partners, get more investors. Now you get to own small percentage of larger properties, and I don't have to be the direct landlord all the time. So that's where it just made sense.
Yeah. So now that you've scaled, how have you done that? Well, I want to ask management wise, what are you doing for management now? Is that in-house or third party? What are you doing?
So Vestas Capital now, my position is I'm in the fund management / co-GP space. I kind of play two different roles. But where I serendipitously fell was, let me back up a little bit to get where I'm going. Investors need to invest with the expert in their niche. So say the expert in Class B value adds in Denver. But if you're an investor and you only know the operator who's the expert in Class B value adds in Denver, you're only investing in Class B value adds in Denver. You're not diversified. And I managed to find myself in a unique position where I was raising capital and I could partner with experienced operators, but I could be agnostic to location, could be agnostic to asset type. And so now I became kind of this co-GP. I partner with experienced operators to bring my investors with me, and then I get to switch around. So my investors are getting diversified opportunities. And that's, so I don't have a team other than some VAs. I partner with those experienced operators and have funds, or I co-GP. So yeah.
Gotcha. That makes sense. And I want to ask this. So I've seen, especially the last couple of years, obviously values have dropped, interest rates have gone up. I've seen, bigger, smaller syndicators kind of struggle through that.
Yeah, absolutely.
Probably sign up for short-term debt, but how are you making it work through this somewhat uncertain time?
So yeah, we're in like this commercial real estate slump across the board. And you're right, all the big and small people have struggled. We have struggled as well. I have a mix of some very stable cash flowing assets. I have some that we're just withholding distributions. We've done some small capital calls on others. At the moment, we haven't lost any investor capital. There is a unique portfolio that I'm involved in where, and this is where the funds get interesting to me. So we got into a $30 million portfolio. We bought 3 different properties, 3 different asset classes. They're all multifamily, but Class B, some value add, some more stable, and then a Class A brand new in 3 different cities, 2 states. We were going for a tax abatement in Houston, and we got approved. Everything is like, we have path to success. And then the governor signs a bill that says no more tax abatements. And so even those who have been approved are now cut off. And so a whole lot of properties now that were under these tax abatement programs, all of a sudden their taxes came right back. So we're in the middle of a fight on that. What's so annoying to me on that is that property is super stable. It's Class A, it's brand new, it's built in 22. We picked it up off of the developer. It's been stable, 97% occupancy. Like it's a screaming property as far as operations go. But we have fixed rate debt plus a pref equity in there. The pref equity costs a little too much. Expenses have gone up in Texas, including taxes, insurance, right? There's a whole lot of headwinds against us. And so operators are doing great. It's just these external factors have hit us so hard that we're put in this position to where we may have to sell that property. The silver lining in that is if we do lose the property, investors lose some share of money, but because it's a 3-property portfolio, that is only about 22% of the investment. So the other 2 properties make up 78%. So there's a potential you could still make money, not as much, but it helps being diversified rather than being invested direct.
Yeah. So you're spreading the risk across different properties and different markets with these funds. Is that right?
Yep.
Okay. So that I was going to ask, what are you doing going forward? Because there's some things, the tax abatement at, how can you plan for that? So I guess what other things are you guys doing going forward to try to mitigate that best you can and continue to do deals?
So I've pivoted away from apartments at the moment. It's weird because right now there are incredible deals as operators start losing properties to foreclosures. You can get these super discounts. It's like buying properties in 2010, getting cheap properties, but investor sentiment is super low. There's hesitancy. But now I'm pivoting into, I guess there's 2 answers to this, but I'm pivoting into medical real estate and some other assets. One, for more diversification, but the medical real estate, triple net leases with the medical offices, this is like dentist offices, 10 to 15-year leases. It's just stable. And then yet again, this is a portfolio. We bought 13 properties with $11 million. So risk is spread. Yep. And then back to what would I do differently, even in an apartment deal? I'm really going to shy away from any deal that has mezz or pref equity positions in it, because I've seen a lot of good deals go bad because of those mezz loans or pref equity that force a sale or force foreclosures. Like it's wild to me. This pref equity firm, I believe their interest rate, it's high. It's like 16%. If they dropped it to 14%, they're still making great money. The property would be positive and we would be fine. Like everyone would be great, but the pref equity is like, no, we aren't going to drop it 2 points. You're going to have to sell and everyone's going to lose money except for us. So to me, it's like, there's a bunch of a-holes out there and they just care about themselves. So, it's.
Yeah. But how are you finding any of these deals? Have you always used the same style or have you changed them up? How are you finding all your properties?
It's networking. At this point, I networked hard in the 2019, 2020, 21, 22, right? The earlier years. I stopped going to conferences at this point, but my network is big enough to where I have access to enough deals and I've established myself as someone who can bring funds that they come to me. I get more deals than I'm even willing to jump on. Obviously, the same as acquisitions. You get 100 deals, you choose one. Same goes with me. I'm very selective in who I work with and what opportunities I choose. But yeah, I definitely am looking for newer and unique asset classes, just because my investors tend to like diversifying.
Sure. So you're getting pocket listings. How did you, starting off first couple of years, how did you find your deals?
It was conferences, finding people, and it's relationships. Yeah. It was building relationships over a couple of years to the point where when someone was willing or needed, they phoned me up. Actually, the first one, I was like, hey, I'd love to partner. I said, yeah, absolutely. But it took a while to build those relationships.
Sure. So you're finding deals at conferences. What conferences for? Because that's the biggest thing that I hear. Well, the biggest thing is people don't take action. Obviously, you took action. That you don't have that problem. But biggest thing that I hear people having problem is finding deals.
Yeah.
But I don't know. I mean, I've definitely know people that have gone to masterminds, conferences, seminars, whatever, and partnered up with people, and then they find deals. But what conferences would you recommend? Because there's a lot of scams out there too.
There's the guru conferences. Yeah. And so I really liked Best Ever.
Joe Fairless.
Yeah. Michael Blanc had his conference I went to once, and even at Dan Hanford's, what was that, Multifamily Investment, MFIN. I think there's 3 or 4 MFINs, but I went to those. The interesting part on all of those is I would spend more time in the hallways talking with peers than I would listening to speakers. And I think that's really where all the relationships were built.
100%. Well, and most people don't do that, right? Most people go kind of hide in the corner. Maybe they run
can't be an introvert.
Yeah, you got to go there. Yeah, if you're introverted, you got to go there and get out of your comfort zone.
Yeah,
and talk to anybody and everybody. And
I'd say I'm an introvert, but I can be extroverted as needed. And just at the end of the day, I'm super wiped.
Yep.
You go to bed.
You got to go recharge yourself.
Yeah, exactly.
Yep. That's awesome. So where to from here? Where to next 3-10 years? Where do you see yourself going?
It's interesting. At the moment, I'm still moving full throttle forward, doing what I'm doing. Ultimately, when some deals go full cycle and I get some more liquidity, I'll probably maybe buy some businesses, be an absentee owner and buy a business. And then, I guess the ultimate goal is I could be my own family office. I've seen this with some a close peer of mine who's, I guess, wealthy enough now that he's deploying his own money and he's bringing his friends with him. So he created a fund that's like, he's no longer marketing. He doesn't care anymore. He has 20 investors that are also wealthy, and he just goes and finds things he wants to invest money into. If he brings his friends with him, he writes extra big checks and he gets better returns, right? He gets a better share class than a $50,000 investor for his own money. So, and he's essentially his own family office. And I think I would ultimately get to that point if I have some big exits.
Yeah. Seems like a lot of people are going that way, buying businesses. I'd see it as kind of, it's already happening, but it's kind of like the next gold rush, because real estate it's definitely gotten harder. And I'm in self-storage and kind of got in before the latest big boom. But businesses, it's still so untapped. And there's so many businesses that you can choose from out there that you can improve systems, tweak them a little bit and make it bigger. Do you have any type of businesses that interest you?
Yeah. I hate to just parrot what Cody Sanchez always says, but she's right. When it comes to boring businesses, those services like HVAC companies, plumbers, no matter what, if there's a recession or a COVID, you're needed. Yep. And I think those businesses are very stable and great cash flow. I think the biggest challenge to those from a management standpoint is, and I've talked to several people who are in those industries, it's labor. It's hard to get the skilled labor now. And sometimes you get a skilled laborer and they do a horrible job and then you have to go out and fix it. But for you and I, who don't have that plumbing experience, that adds another level of challenge. So if we go buy that business, you have to have a manager compensated very well to manage that business for you.
Yep. Yeah, it's a lot. I come from the trades world and from the sales estimating side, but it's been hard to find labor since probably 2010, around that time frame. So it's been hard, but it's gotten so much harder, and you really have to work at it, and you may have to steal some. You have to go to Home Depot early and find them, but it's a lot more work. They're not just going to fall in your lap, and you have to really pay them and treat them really well, which I think most contractors, especially old school, don't do. But yeah, it's I'm really interested in that space too. It's a labor thing. It's trying to find people, quality people. Otherwise, everything else is, and not, when I worked in the trade field, if you answered your email or your phone, you got the job. And it's still kind of like that. If you can get someone a quote, I'm still waiting. This is what I think we're going 3 months. I'm still waiting on a quote for something in our backyard that should have a quote within a few days. So it's just, service has kind of gone out the window, and they have enough work. They don't care.
Yeah, I hear you. And I think there's also new, unique ways to incentivize employees to, like, the old mom and pop shops. They're probably not treating their employees as well. And I think if you flip the script a little and care about the employees, incentivize them, there's ways around that.
100%. And then they talk. Then they have referrals, right? So you get one good employee, you take good care of them. They have other friends that are probably in the trades too that you can bring referrals in. Absolutely.
Yeah.
So before we get going here, I know you've got a book. Tell us a little bit about that.
Yeah. I just released this like 3 weeks ago. It's The Engineer's Guide to Real Estate Wealth. I'd say it's an easier digestible version of some other books out there. And it's meant for the passive investors wanting to learn how to just vet deals, do due diligence on the asset and the sponsor. I try to keep it lighthearted, a quick read, because to be honest, even though the engineers want to dive in, do the details, they don't really have the bandwidth. They need to absorb something quicker. So that's why I wrote this book.
That's awesome. So are you looking to just sell books, or are you looking to start a community and some coaching, or what's your plan?
No. My plan is this is purely a lead magnet. I'm not going to make any money on this. I joke to people that I'll probably sell enough copies to take my wife to a nice dinner at Olive Garden. But I've so far probably sold just under 100. But and then there's a QR code in there that'll take you to a toolkit, and I've created some nice tools for doing due diligence. So there's more to it.
That's awesome. No, well, and people don't talk about why, I don't want to say the right reasons, but probably a good reason to do something like that. Write a book. In my, my instance, it's a podcast. You gain credibility, right? Immediately.
That's absolutely it.
Whether it's a bank, it's an investor, it's, someone selling, they Google your name and you look like a so-called expert. You wrote a book. It gives you instant credibility. So most people don't talk about that, but that's a great reason to do that.
The other thing, I should talk about this a little bit more. On the top, it says, think differently, invest differently, live differently. I came up with that motto several years ago, and I actually framed the book around that. So the first section is think differently, think about investments differently. And I kind of get into details on that, and also think about investing in real estate differently other than being a landlord. And then I talk about my story. Invest differently, that's kind of analyzing things. And then how to live differently. The end of it is all about how to build a portfolio and think about tax advantages. And so it's kind of the full cycle. It's not just blinders on doing due diligence. It's thinking about the whole thing.
That's and you hit on something I want to hit on it before we go, but you said don't think that you're a landlord, think of it differently. I'm sure you go into it in that book, but I think that's what holds a lot of people back, because everyone has heard the term slumlord and they don't want to do that. And maybe they've had a bad experience. There's so many great landlords out there that people don't talk about. They just, for whatever reason, landlords get a bad rap, but that's not the case.
It's same as restaurants. Like, people leave a bad remark on a restaurant, but had good food there, and one person had a bad experience, so they get a bad review. So same with landlords.
Absolutely. Cool. Well, this has been great. Obviously, everyone go check out his book. If people have questions, want to reach out to you, how can they find you?
Yeah, we froze there for a second. Yeah, you can find me at vestiscapital.com. If you don't know how to spell it, it's fine. Go to investwithflint.com and it'll take you right to my website.
Awesome. I'm sure they can find you through Googling your book too. It's on Amazon, I'm guessing, right?
It's on Amazon. Yeah. If you just Google Flint Jamison, I'm the only Flint Jamison that's published a book.
Awesome. Well, yeah, guys, go check out that book, buy the book, and appreciate everyone for listening. See you next time.
Thanks for following, subscribing, and listening to this episode of the Do More podcast hosted by John Farling. To learn more or ask questions, go to l4investing.com.